Yes, it happened. And it is important to talk about it in a clear and steady way so everyone understands exactly what this approval means and what it does not mean. Congress has officially approved legislation that directly affects Social Security, monthly benefit amounts, and certain forms of extra financial support for seniors, retirees, and people who depend on fixed incomes across the United States. News about the bill has spread quickly, and with it has come a mix of excitement, confusion, and rumors. Some people expect large checks right away, while others worry about cuts or complicated changes. The truth sits somewhere in the middle. The purpose of this explanation is to walk through the facts carefully, using plain language so you can understand what has actually been approved, how it works, and how it could affect your money this month and in the months ahead without unnecessary fear or unrealistic expectations. The timing of this bill matters. Many older adults are feeling real financial pressure right now. Everyday costs have increased faster than most fixed incomes. Groceries cost more than they did just a short time ago. Rent and property taxes have climbed. Utility bills, insurance premiums, and healthcare expenses continue to rise. For people who rely mainly on Social Security, even small price increases can create difficult choices between essentials. Lawmakers have recognized that strain. This legislation is part of a broader effort to strengthen income stability for people who depend on these benefits as their main source of support. It does not promise to solve every financial challenge, but it is designed to ease some of the pressure and provide more predictable help where it is most needed. One of the most important things to understand right away is that this bill does not replace Social Security, and it does not cancel or reduce existing benefits. The foundation of the program remains intact. Retirement benefits, disability benefits, survivor benefits, supplemental security income, and related payments continue under the same general structure. What the new law does is add funding and make policy adjustments that allow for increases, supplements, or targeted assistance under certain conditions. In other words, it builds on the current system rather than tearing it down and starting over. This distinction is important because it means most people will not need to learn an entirely new process or reapply for what they already receive. Instead, changes are layered onto what is already in place. When people hear the phrase extra payment, it can sound like everyone will receive the same bonus check at the same time. That is not how this legislation works. The extra support tied to this bill is more nuanced. In many cases, the help shows up as slightly higher monthly deposits, supplemental credits, or temporary boosts that depend on your benefit category and income level. Some individuals may notice a modest but steady increase each month rather than one large payment. Others may qualify for targeted assistance based on financial need or specific circumstances. These adjustments are designed to be more precise so that funds go where they can make the biggest difference, rather than sending identical amounts to everyone regardless of need. Another key goal of the bill is protecting purchasing power. Social Security already includes cost of living adjustments, but those adjustments often trail behind real-world expenses. Prices for necessities like housing and medical care frequently rise faster than average inflation. This gap can quietly erode the value of a monthly check over time. The new legislation acknowledges that problem and allows for additional support when standard adjustments are not enough to keep up. By adding flexibility and supplemental funding, the system can respond more effectively when seniors face unusually high costs. The idea is not simply to raise numbers on paper, but to help benefits stretch further in daily life when paying bills and buying essentials. It also helps to understand what happens after Congress approves a bill like this. Approval does not mean money appears instantly. Federal agencies are responsible for putting the changes into practice, and that process takes time. Payment systems run on monthly cycles and require verification steps to ensure accuracy. Some updates can be implemented within weeks, while others may take several months to fully roll out. This can feel slow, but it helps prevent errors that could lead to overpayments or delays later. The legislation includes resources to improve staffing and processing efficiency so that claims and adjustments move more smoothly. While no system is perfect, the goal is to reduce backlogs and make benefit delivery more reliable. For retirees already receiving Social Security, the most noticeable effect will likely be adjustments to existing deposits rather than entirely new streams of money. You might open your bank statement and see that your regular payment is slightly higher than before. That increase could reflect supplemental funding or a revised calculation tied to the new law. For people receiving supplemental security income, the impact may feel more significant because those benefits are often smaller to begin with. Even modest increases can make a meaningful difference when budgets are tight. Disability beneficiaries are also included, recognizing that many face additional medical and accessibility costs. The bill allows for targeted support that reflects those realities without changing the basic structure of disability coverage. Survivor beneficiaries, such as widows and widowers, are another group the legislation considers. Survivor benefits are often lower than full retirement benefits, and many individuals in this category live alone on a single income. Rising costs can hit especially hard in these situations. The framework of the bill allows for adjustments that help protect these households from falling behind. These changes are integrated into existing formulas to maintain fairness and consistency across the program. At the same time, the law avoids creating complicated new categories that might require extra applications or confusing paperwork. The emphasis is on strengthening what already exists rather than adding layers of bureaucracy. It is also important to clear up confusion about stimulus-style payments. This bill is not the same as the emergency checks that were sent during past national crises. Those were broad, one-time payments distributed to nearly everyone. The current approach is more structured and tied directly to the Social Security system. While some people may receive amounts that feel similar to a bonus, the money typically comes through adjusted benefits rather than a separate universal check. The funding has already been approved within the federal budget, which means it is not dependent on future votes or uncertain negotiations. However, the way it is distributed depends on eligibility rules and administrative timelines, so experiences will vary from person to person. Fairness is another principle behind the legislation. Lawmakers have tried to direct more help toward those with the greatest financial need. Someone living solely on a very small benefit faces a different reality than someone with additional savings or pensions. By targeting support, the system aims to reduce hardship without overspending limited resources. The bill also includes protections against sudden reductions in benefits. Concerns about the long-term stability of Social Security have circulated for years, and while this law does not solve every future challenge, it avoids immediate cuts and helps reinforce confidence in the program. That reassurance matters for millions of people who depend on these payments to cover basic living expenses. As these changes take effect, staying informed will be essential. Misinformation often spreads quickly when major legislation is announced. Stories about massive checks or automatic windfalls can create unrealistic expectations. The most reliable information will come from official notices, benefit statements, and consistent deposit patterns. It is wise to review your monthly payments carefully, keep personal records, and report any required income or household changes as usual. Higher benefits can sometimes affect things like premiums or other calculations, so looking at your total net income gives a clearer picture than focusing on one number alone. By remaining calm, organized, and attentive, you can make the most of these updates and avoid unnecessary stress. In the end, this approval represents a practical step forward rather than a dramatic overhaul. Congress has chosen to reinforce Social Security and provide additional support where it is most needed. The changes are real, funded, and built into the existing system, but they are meant to be steady and sustainable rather than flashy or temporary. For many seniors, even small increases can add up over time and provide breathing room in the monthly budget. Understanding what has been approved, how it is implemented, and what it means for your own situation gives you greater control and confidence. By approaching these updates with clear information and careful planning, you can move ahead knowing that your benefits are designed to remain a reliable source of support in an uncertain economy.